All right, joining me now, Mark Newton, Global Head of Technical Strategy at Fundstrat Global Advisors. Mark, good morning. Thanks so much for joining us.
Thanks, Frank. Great to
All right. So we just heard Rick Reeder say the market's got some pretty good footing. He sees, more upside to come. We actually want to look at some areas of the market where there's been a little bit of pressure, and you also see some upside. Why don't we start with the S&P 500?
Sounds good, Frank. Let's take a look at the S&P.
Yeah. So, Mark, if you don't mind, if I start, for the last month, S&P down. We're going to go over here. A little bit of weakness, down about 3.5%. But you're saying there's an upside trend overall that you're bullish on.
Yeah, I agree, Frank. When you look at the longer-term trend, despite all the damage we've seen in the market this year, starting really last December, we've not really seen sufficient evidence of the market truly breaking down. That's thanks to technology. So 5,700 is really an important spot. Any sort of weakness into CPI, that would be something investors really want to consider, that trends have not shown sufficient deterioration to turn to negative at this point.
So does that signal we're going to see a bounce in the S&P 500 after CPI in your mind? Is the momentum just going to pull us that way, even if we get a hotter than expected CPI, or is it dependent on the CPI report?
So look, Reeder has his fundamental thoughts. I have my technical thoughts. Both of them say that markets are near levels within 3 to 5 days where we're going to bottom out. So longer-term trends remain intact. Sentiment's gotten a little skittish. Technology, to its credit, has been able to hold the market up. That's a great point, and really a reason why we're likely to stabilize. Significant support down near 5,700. Not only does it line up with last November's lows, but also lengthier long-term uptrends just from 2023. So really, really good support is a good time to buy, in my view.
Sentiment might be a little bit more than skittish. I think the VIX is up to about 20 right now. So a lot of index investors especially are going to be glad to hear you say that there's going to be a bounce in the S&P 500. We want to move to one of the most widely held stocks in the market. That's Nvidia. So I was just looking at the charts myself. I'm not a chart master like you are, but I was looking at the charts myself. Since CES, which is a very small part of this chart, I'm looking at Nvidia, down just about 8% since there. We all thought that alligator jacket would lead to a rally. I guess it didn't. But you're saying there's a trend here that you're seeing as well that's setting up Nvidia for a potential bounce.
Yeah, so despite a lot of the carnage we've seen in semis since last July, when you look at Nvidia, this continues to be a standout leader. And similar to the broader S&P, the stock has pulled back to almost exactly where it needs to think that, okay, it's a great risk reward. Short-term weakness, but no longer-term trend damage. Investors want to be buyers into this pullback.
All right, so I just want to ask you this. Nvidia is a chip stock. These are cyclical stocks. So when you're looking at the technicals of this stock and you see this trend, any concern that the cycle comes to an end at some point, and that's the downturn?
Well, we have to let the stock tell us that. Okay. And unfortunately, we can't bet against ongoing uptrends. Most of the stocks is down about 15, 16% from its July peaks of last year. Nvidia still within striking distance of all-time highs. So, it seems like a very severe short-term pullback. The key lesson for investors is always put the short-term price movement into context of what the longer-term charts are showing. And so the longer-term charts show this remains in great shape.
We got one more. We got to do this one quick, Mark. This is the equal-weighted financials. So, again, I'm looking at the charts. I want to be like you. I want to be a chart master. Last month, equal-weight financials actually down just about 5%. What's the trend that you're seeing here, and how does it impact it or influenced by earnings season?
So, look, financials is one of the largest sectors within the S&P outside of healthcare. Technology being number one at 30%. Similar to all these other charts we've seen, the pullback has not done any real damage. We're down to levels that make really, really good sense. And this is an equal-weighted financials from Invesco. So we strip out the Berkshire Hathaway, the JP Morgan. Financials has pulled back to a great level. My thinking is yields start to roll over. That's been specifically coinciding with this market carnage. I like buying financials.